What's happening, guys? It's been a minute, and this is the first one for the year. So it's quite a timely sort of position in the market to sort of assess where we reside in a more holistic sense. So I thought I'd drop in and give my thoughts. Before we continue, I just want to announce that I've recently partnered with Apex Protocol. They're a decentralized exchange that offer you access to sort of a plethora of self-custody perpetual swaps. If you guys are looking to sort of make the change from, your central counterparts, then yeah, do feel free to check the links in the description below. In a more sincere tone as well, if you guys want to see more videos like this, it really helps me by sort of if you subscribe and like and just sort of, yeah, it doesn't cost you much, but it definitely means, it means a lot for me. So please do show your support. So let's continue, guys. So we're going to start off with sort of a broad view of the markets by just looking at the S&P 500 or the ES minis here, because I believe that they are sort of the barometer of risk that ultimately sort of dictates how Bitcoin and crypto sort of fares over the course of a few weeks. Now, I understand that it's nuanced, and we obviously have local liquidity dynamics, and you can, we do get periods. Actually, the last 2-3 weeks have actually been characterized by lower correlation coefficients. So I don't denounce that, but ultimately, I like to view this sort of as the God market, in the sense that when you get these high sigma events, it's very difficult to see how Bitcoin sort of is able to weather the storm, being a more reflexive version of the asset, especially when you start to see positions ramp up. So it's just prudent to know where we are, and it helps you sort of inform your bias and how you position into greater swing positions per se. Anyways, let's move. So what I've done here, guys, is I've just anchored VWAPs to 2022, 2021, 2022 in yellow and in red. And I've got 2 standard deviations around it, and you can see it's really clean because, market even during this colossal uptrend was capped by these upper bands. And conversely, on the downside, these have been really good buying opportunities as well. So, where we are right now, we're sort of diddling in the middle, and not exactly the best place to sort of position from a risk perspective, at least to the upside. So, as amazing as this rally has been, we've consolidated for quite a long period of time. There's quite a bit of compression down here. I made note of that actually in some of my earlier posts this year, and we got a nice expansive break here. And I think a lot of this up move was, you sort of deterioration and decay in the options markets. People basically hedging volatility, but at the same time, there's been a bit of an upbeat spring to the step this year. We've had 3-4 months of data indicating that inflation was in fact starting to cool, and this last week, these last few weeks, we've sort of we've nullified that. PCE came in on Friday, and this is sort of the Fed's preferred metric. And you can see it's not looking great, is it? And you couple that with a hot CPI, a hotter than expected CPI, and a hotter than expected PPI. It sort of calls into question, the longevity of this current uptrend, and it will definitely be pressure on bulls in the short and intermediate term. So with that being said, we'll quickly run through. While I don't directly trade the S&P, I do use it to sort of, gauge, as I said, risk. And so there is a unfilled gap above us on the S&P index, in and around these VWAPs. So I actually think as long as 3970 holds, which is a key level if you go back to March last year, March 2021, and you can see it's quite a well-respected level here. We consolidated for weeks above this 3970 zone as a pivot. I think as long as we're above this zone, we open up today, I think there's definitely a chance that we're going to pull up into the 4090, maybe a little bit higher. The question now becomes, is this a zone where we are able to sort of hold and consolidate, or is this just going to be, a sell the rip event? To be determined, but given the pieces of the puzzle that we have, and the fact that we're going to start seeing more sort of evidence that basically is directly associated with inflation. For example, I think on Wednesday, these times are in Eastern Standard Time, we've got a manufacturing ISM manufacturing prices, and then we've also got a services PMI, I believe, on Friday. So it's going to be, it's going to be a big week, because these numbers start to suggest hotter than expected. Then yeah, I mean, you can almost bet with certainty that your inflation prints for February are going to come in hotter than expected, and that doesn't bode well for risk as stocks sort of move up into resistance. Let's move on to Bitcoin now. So Bitcoin actually, on a relative basis, is actually holding up much better than the equity market. But like I said, this can be a classic example of sort of lag. Often the S&P is the first to make its move. Bitcoin, subject to local liquidity dynamics and its own sort of features, sometimes lags. But as I said, when you get these high volatility events in the stock market, it's very difficult to imagine Bitcoin sort of asymmetrically hedging against that. So I think for now, you can see this is the composite. You guys are very aware from my videos in the past. I've used this range for a long time now. Above value, like here, great places to get short into this sort of key zone here, and below deviation, good places to get long. So I think as long as we're above this 23,384, 23,350 zone, right around here, I think bulls have, every reason to call for a little bit higher prices. The question then becomes, how high do we bounce in conjunction with an S&P moving back to gap fill? That's probably taking us to, 24,250, I think would be areas to sort of start looking for hedges. And that will take us to this chart here quickly. So this is exactly the same concept as the S&P chart that I showed in the beginning. Anchored VWAPs, you can see how well price respects these sort of zones here. This was last year, sold off pretty violently from those areas. And now this year, we've just come back to mean revert. So as exciting as it is, we're just sort of, this is a classic mean reversion, bear market counter rally as of now, right? This can change if we start to consolidate above this zone. Then I think, let's talk about tagging 32K, right? Let's talk about filling this void here, this inefficiency, and grabbing this cluster here. But till then, I mean, I just struggle to see, with the way sort of the macro stars are sort of aligning, so to speak, how that's going to occur. To be determined. But I think any bounces into 24,360 right here, this is the yearly VWAP this year, and this is the standard deviation bands around it. That's the value area high. I think that's going to be a fade, to be determined. Acceptance above this, then these highs are up for grabs, and we're just going to have to assess the strength or lack of it upon a breakout around that 25K psychological zone. Let's just wrap it up quickly. So yeah, reasons again to just reiterate my stance. I'm a little bit more cautious, not like overly bearish, given the fact that we've had nothing but down only for over a year. But it's just sort of knowing where you reside in the context of a greater trend. And there's forces at play here that are bigger than Bitcoin and Ethereum and such. So it's just good to know where we are. While these things aren't necessarily actionable on an intraday basis, they do line up in these inflection points when markets become heavily dislocated, as they are right now. So you've got a dollar index that is upon a breakout of this zone here will be changing the daily trend. So I can't see why it wouldn't come back to fill out this sort of 110 inefficiency. Couple that with yields skyrocketing, that indicates a change in financial conditions are no longer a tightening of financial conditions and some headwinds for risk. So with that being said, I hope that helps. I hope you trade well this week. In summary, I do think they are going to be bounces, but the sustainability of those bounces, I think, should be held under immense scrutiny. Thanks again, guys, and we'll catch up soon.